Hello and thank you for watching Dukascopy TV. It's that time again when a member of the team asks an expert in the financial industry for their take on what's been moving and shaking the markets this week. I'm Monica Gibson and today Peter Cardillo is down the line to share his insights. Peter, arguably the busiest week on the economic calendar this month is almost over, yet so far without any major surprises. Some analysts believe that what investors can take from the FOMC meeting minutes is a shift from targeting unemployment to targeting inflation. What's been the biggest market mover this week to your mind?
Nothing has really been a major market mover so far, and of course, as far as the FOMC meeting minutes were concerned, I was somewhat surprised at the fact that in one of their passages they mentioned about bubbles, and the fact that it appears that they're going to continue to taper was not a surprise to me. I believe that they will continue to taper because I think that the economy is now moving in the right direction, and we're probably going to see some good news on the labor front. I believe that the economy created about 235,000 new jobs last month, and I kind of suspect that the average growth of new jobs on a yearly basis will be close to 250,000. So that means that we should see economic activity around 3.25%.
The ECB said all eligible tools are available, but failed to specify what they may be. The Bank of England now appear to be backtracking on their mantra that 7% unemployment would mark the end of the record low interest rates. And after flirting with the idea of lowering their unemployment target to 6.5%, the Fed now stated thresholds are not taper triggers. Is it possible for investors to still have faith in central bank policy plans, or is credibility disappearing out the window?
No, I don't think it's affecting the central bank's credibility. The central banks are notorious for being very cautious and doing a lot of double talk, and this time it's no different around. We look at the ECB, Mr. Draghi's, basically one breath says that he doesn't see deflation, but then, of course, he says he's ready to use whatever tools are available. And of course, while I don't think they're headed for deflation, certainly the inflation data continues to be weak. Now, there are signs that, as a whole, Europe is pulling out of recession, and some of the peripheral nations are beginning to shine again. But again, there's a lot of ifs, and I guess the biggest problem that Europe faces is the high unemployment rate, which is stuck at a very high level, and it's not moving. So that's probably the biggest concern I have for Europe. But I think the EU zone is going to pull out of recession this year. When I say pull out of recession, I think that as a whole we'll see growth come back to the Eurozone, and I think that certainly it's not going to be robust. They're probably going to mull their way through, but they're going to have to keep interest rates rather low for a sustained period of time because of the high unemployment. I don't see employment really coming down that much in Europe.
Yellen stated her confidence in the US economy, saying, "Most of my colleagues on the Fed's policymaking committee and I are hopeful that the first digit of GDP could be 3 rather than 2. What was your takes on Yellen's confirmation this week, receiving the least Senate support on record? How much, if anything, should be read into this?
Well, I'll answer the latter part of your question first. I didn't think that we were going to have any problems with Ms. Yellen being officially nominated. I thought her nomination was clear, and it did. And I suspect that, if you look at party lines, obviously the Republicans didn't vote, but the Democrats did. And so there was a tough hearing for her. The questions were tough, but by and large, I think everyone is really satisfied with her. She's been around for quite a while, even though she is considered one of the dovish members of the central bank, and now she's going to be the head of the central bank. I think she might actually surprise the markets And I think, that unless we get growth above 3.5%, which I don't think that's going to happen in 2014, I think she will continue to influence as far as tapering is concerned. We'll continue to see a modest pullback on a monthly basis. And as far as monetary policy is concerned, I think she'll keep rates low. However, if growth should exceed 3.5%, then I think she will make an about face, and I think that we could expect, obviously, tapering to end much sooner than we expected, and the real nitty-gritty of monetary policy would change.
And of course, rounding off the week is the NFP Friday. Most analysts believe the report should be bullish for the dollar. Anything above 200,000 should also see the continuation of $10 billion tapering from the Fed. But what do you think? Is this the dollar's year?
Yes, I think so. In fact, I've been calling this the year of the dollar. I think we're going to see a very strong dollar emerge. And of course, that's going to be based on several factors. Number one, stronger economic growth, obviously less stimulants, and eventually the ending of the stimulants. And I also believe that another favorable fundamental for the U.S. currency is the fact that the budget is beginning to shrink somewhat, especially our trade deficit, and that's good news for the greenback.
Peter, thank you so much for your time today. Well, viewers, that's all from me at the moment, but tune back in later to find out just what both the US NFP and Canadian unemployment figures bring to the table. Goodbye for now.